Investors. The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time on Wednesday. We got some CPI data. Inflation, not as hot as the market was maybe thinking, and we got a market that's rocking this morning. S&P's just hit 4,200, 4,201 on the dot. We're trading right now at 41.92. You're up 1.6%. How about the NASDAQ 100? Up 2.2%. We're at 13,324. You got the Dow up 1.3%, 33,152. Bitcoin's trading with the market, man. Bitcoin catches a bid, up 4% right now. We got the crude contract trading at $90.54. We're going to talk to our man Teddy Kegstad at 40 past the hour. We'll talk a little bit of crude. Great day to talk to Teddy. We're going to talk a little bit of notes and bonds. Talk a little bit of Forex as well. We get the note and bond market rocking today as well. Gold contract. There's some volatility for you. We got some dollar action in a big way. You have the dollar pull back. You have gold spike. We're seeing the volatility in the currencies. We'll jump over to those in a moment. But we jump to notes and bonds. We're getting higher price and lower yield, folks. You get the 10-year. 18 ticks at 120.02. Come on, catch up with me. There we go. You spiked to 120.21, man. You're talking about, what is that, a full point and 7 ticks to the upside. Since then, we've given up about half a point. You spiked right to where you were prior to that Friday jobs number. Quite an acceleration. We back off a bit. You got the 30, you're up 13 ticks right now at 142.26. And we jump over to the volatility index this morning. 2073. We're going to get a 19 handle, man. Yeah, I was going to say, that is the lowest level we've seen since that acceleration began in April, man. We haven't seen a VIX at this price level in almost 4 months. Remarkable when you say that, right? You haven't seen a VIX, folks, at this price level in 4 months. Quite the move in a big way with that volatility index trading right now at 2072. And let's jump over to some of the FANG stocks and see how they're trading. Back to a 15-minute. You jump over to Amazon. Amazon catches a bid, man. What are we up? $4? Whew, that's going to be a pop on Amazon. What is that? 3% Amazon? Just volatility everywhere, man. We jump over to the big dog, Apple. Apple shares trading up about $3 right now to $167.54. It's going to be an interesting open in a big way, man. Microsoft up $6 right now, up to $290, back to $288.30. And how about Tesla? We got to talk about Tesla as well. Up $40, okay, but Tesla's got their own story going on because our man Elon Musk, your man Elon Musk, out there selling $7 billion of Tesla shares, folks. That's right. You heard it. Let's get the headline. $6.9 billion. I rounded up. He says, and this is where the headline is basically his PR spin. All right, Musk sells almost $7 billion of Tesla to, and it should be quoted there, avoid Twitter fire sale. Well, that's what he's saying. I'm not so sure that's the case, folks. He's offloaded about $32 billion of Tesla shares in 10 months. Says he'd buy the stock back if the deal doesn't close. Do you believe that? Is he going to buy back $32 billion worth of those shares in 10 months if it doesn't close? I don't know if that's going to happen. You be the arbiter of that one, but I don't think I'm trusting that one if I'm a hardcore Tesla shareholder. $32 billion worth of shares sold in 10 months, folks. Okay? Maybe he's diversifying. Maybe this is his smoke screen to get out of Tesla without just kind of leaving everyone holding the bag that's been his big supporters for so long. 7.92 million shares on August 5th, according to filings. Musk tweeted he was done selling and would buy shares in the maker if Twitter deal does not close. And here's the quote: in the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through, okay, it is important to avoid an emergency sale of Tesla stock. You have Tesla trading higher on that news, maybe because they think he's done selling for right now. Then you have Tesla trading higher on the market news as well. He sold $32 billion, folks. I talked about it a while back, saying, hey, don't be surprised, man, if Elon just moves on to his next big venture, right? Tesla, has made it. They are a mainstay going forward. Tesla. He is an innovator, folks, and I'm not sure that his time is best spent innovating at a company that pretty much is going to become an operational powerhouse in terms of now they have to get all of those things into fruition and that he has put into play as an innovator. Maybe he moves on to his next venture, which is SpaceX, right? Seems like he's already achieved what he wanted to with Tesla. He has moved the whole world forward with electric vehicles, okay? No matter what you think of Elon Musk, I think that one's an undeniable in terms of him accelerating the way that these car companies had to compete. Otherwise, they were going to get lost in the wayside. With our man Elon, he's done that. He's got other companies, man. He's got AI. He's got SpaceX. He wants to put people on Mars, etc. So we're going to see how that happens. Nonetheless, that's quite a haircut in terms of his ownership, man. In terms of what he has sold on Tesla shares, $32 billion. Yeah. He's lost a little bit in that price level, nonetheless. Okay. All right, let's get into the CPI data. What do we get? We get a headline number. Well, let's pull up this one. That puts the headline nice and easy. 8.5% in July, less than expected. Still some pretty staggering numbers, man. Remarkable the market can pop so much, but that's where we are. On a monthly basis, prices were flat. That's a big one, man. On a monthly basis, prices were flat. All right, we're going to be talking to our man Kevin Hincks after the break. He always says, folks, we knew 11 months of this data coming in to this data point. The only real data we're getting is over the last month. So watch the month-to-month numbers because we know the other 11 months, right? So the year-to-year number, we already know 11/12 of that year-to-year number. We just needed the last one, and the last one was flat. Now, energy prices declined 4.6, gas fell 7.7. That offset a monthly gain of 1.1% in food. Food still going up 1% a month. Folks, what is that? That's 13.2% on a yearly basis. Food is going up last month. Food's already up, right? Coming into the month of July, I would say food prices are already pretty spicy to the upside. And what do we get? We get an annualized rate of growth on food prices of 13.2% in the month of July. What do we get in shelter costs? 0.5% for the month. That's 6% inflation in shelter costs. That one's going to be sticky, folks. Rent prices, mortgage prices, very sticky in a big way. Now, year-over-year change in consumer price index, you could argue that that's a peak, but man, keep the celebration at bay for just now, folks, because if you look at that chart, would that chart scream to you, hey, we're out of the woods, we got it made, we're all set, inflation's over? No, if anything, I'd say, okay, there's a chance that we've peaked, right? We're at 8.5%. We're down from, what was it, 9.1%, I think, for the month of June. Okay, so you come down, 9.1 for June. But look at where we were, folks. You had 8.5. We're where we were in March, right? What happened to coming in the later part of the year when inflation was supposed to be tamed because of some of the comps we were dealing with? We're right where we were in March. Remember, the conversation was March was supposed to be the peak. Well, energy prices have thrown a wrench in that one, okay, for sure. But keep the celebration at bay. You know, good news, month over month, flat numbers. But keep in mind, man, the only thing keeping those numbers flat are gas prices down. They're still pretty elevated overall. Gas prices down, and what do we got? We got food rising. We got shelter rising. Not all roses in that report just yet. Stay tuned, folks. We got S&P's up by 65, NASDAQ up by 280. We'll be coming back with our man Kevin Hincks. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P up 70 points right now. We got the NASDAQ 100 up 293. We got the dollar crashing to lower prices. We got yields right now pulling back. We got the 10-year, pulling back. 10-year up 22 ticks right now. And you're talking about a yield coming into that 10-year when we take a look at the action. Low for me. Here we go. 2.73%. We sit on that 10-year right now. Folks, let's jump over to our man Kevin Hincks. Every trading day, 12 noon Eastern time, right here on Tiger TV. Fast Market with your host Kevin Hincks, Tom White. They break down the day's market action, walk you through hypothetical trade setups. And boy, we got a good day for some action and some fast markets today. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Well, this is going to be interesting today, huh? I mean, this number that was in many ways somewhat expected, but, let's face it, a lot of us thought that the CPI data would come down last month, and it didn't. And it kind of scared the market a little and made us worry. Well, it looks like it was inevitable, just not timely. So here it comes the next month after. We knew these numbers that you and I have been talking about: crude oil coming down, food prices, grains coming down. You knew that would have to show up in the data eventually. And Tommy, what took us higher is what's bringing us back down. Because if you take energy out of this, it's actually a pretty mixed bag. Some things are higher, some things are lower, but energy, Tommy, that was so strong when crude oil was peaking towards 130, down across the board. Every metric in energy is lower, Tommy, except energy services and electricity is still a little higher. Everything else was down. I mean, gasoline down 7.7%. Fuel oil down 11%, Tommy. So the energy sector is what's bringing us down here, Tommy, off the peak highs. But frankly, that's what brought us higher. That was the acceleration that was so important during those peak times. That number's coming down. It's a good start, Tommy. Here's what I think. Real quickly, I think the percentages for rate hikes will come down significantly, maybe even an overreaction in terms of that trade. And then the Fed will come out and say, hey, wait a minute, we still got to fight inflation. I think that's what you'll see in the next coming days.
Yeah, pretty interesting, right? I was looking, we get a flat number month over month. You've made some great points in the past, man. I always think about it when we get these numbers. You get the year-over-year number, and as you said, we already know 11 of the 12 months that we're getting in that year-over-year number, right? Really, the only numbers we're getting are the last month that they're reporting. The headline number year-over-year, flat, which is month over month, flat. But a lot of that having to do with what you just talked about, man. Some of the costs, shelter up about 0.5%. You still had food costs up 1.1%. I was talking about in the beginning of the program. Pretty remarkable. We all know food costs are pretty elevated, and in the last month alone, they're still going up 1.1% on a monthly basis. But the market likes it when we have less inflation than pretty much the expectations, because right now that's what it's all about. On a headline, back to where we were in March, though, which is remarkable. March, 8.5%. We get July, 8.5%. So we got a long way to go, but the market's sitting right now at 4,200. Risk reward wise, Kevin.
The market really sees this as a relief, because finally what we all thought was inevitable is actually starting to happen. And now what you're going to see all over financial news today is peak inflation, right? They're going to beat you over the head with that today, that we've seen peak inflation. Now, you made a really good point here, Tommy. Food being up 1.1%. That's a little stingier than everyone thought, right? I see a lot of mixed numbers. Used cars down, but new cars up. So that's basically a wash. But, Tommy, services and housing, which make up part of the core, those are being stingy. Those aren't coming down as quickly as thought. So that's why some expectations were that this number would be, firm to actually up in the year-over-year core. Well, it didn't. It was a pretty good miss in terms of ex-food and energy. So 0.3, it was 0.7 a month ago. They were looking for 0.5. So, and then that unchanged year-over-year, 5.9%. These are all numbers that were better than expected, Tommy. And remember, this market often trades off of what it is actually versus expectations, and this number was weak.
And how about the dollar index, Kevin? I got the dollar index right now, the DXY, 105.13, down a full point and 24 ticks right now. Crazy action. What's your take on the dollar? Obviously, it's tied into yields, to rates, and so forth. But we're getting some big action on it. Yields
are lower, and the dollar's lower. Crude oil was lower. Now it's back to unchanged. But, yeah, that's a big move in the dollar. Tommy, I think 105 level in the dollar is a pretty significant level. If it breaks there, the dollar could break significantly lower from there. Doesn't mean it will, but that's certainly a level to watch. A close below or at or near 105 on the U.S. dollar.
Nice. I'm going to jump around a little bit to Tesla. So our man Elon Musk, he's out there selling almost 7 billion shares of Tesla. He's saying it's for Twitter. We all know that it might not be completely transparent in terms of everything going on, as always, out on Elon's Twitter account. But Tesla actually got a little bit of a lift last night prior to even the CPI number, on the premise that he might be done selling for the time being, which is what he's saying. We're taking him for his word, I guess. It catches another pop. Any comments on Tesla? As again, Elon in the news for selling some Tesla shares, and a big number, man. He's up to over $30 billion he's sold in the last 10 months alone.
Yeah, 7.92 million shares he sold. He raised about just under $6.9 billion. He's going to have to pay some taxes on that. But what I think it does, it makes the percentages of a Twitter deal go up. If you look, Twitter's up pre-market. So definitely. I think that number, he's raising cash. And, Elon Musk, smart guy, he knows that if he loses this judgment, that he's going to have to raise cash possibly, because he even said he has equity partners. If they don't come through, he's going to have to do it himself. That's why he raised cash. So I think rather than do it when the market isn't expecting it versus when they are expecting it, much better price that he probably got in the open market. So another smart move by Elon Musk.
Yeah, I mean, he seems like he is a trader, very brilliant man, obviously, but you just had Tesla folks shopping around between $650 and $750 for the better part of 2 months at least. And his price execution day, August 5th, Tesla was trading between $900 and $850. So maybe Elon, same thing, saying, hey, you know what? We get the S&P sitting at 4,200, man. We got a lot of volatility in the time being going forward. And I don't want to get trapped if the market pulls back, and guess what? Tesla's going to pull back as well. With that in mind, Kevin, we got a lot to talk about today. What are you guys chatting about at Fast Market coming up at 12?
After a 2-day sell-off in the semiconductor, we're going to trade Micron in the first segment. Ooh. Then, of course, the high-profile name of the week, really, Disney. Like Folio will do a presentation on Disney, and then we'll look at another streamer. Because streaming is so in focus, we'll trade Roku in the third segment. So Micron, Disney, and Roku today.
Some good names, man. Disney, they've been hammered hard. They're going to open about $3 to the upside. They got an expected move right now on the Thinkorswim platform. We're looking $6.53. And Roku, man, this thing's been hammered to say the least. They come out with their numbers. What was that, a couple weeks ago? Yeah, down to $62. Remarkably, Kevin, they actually got it all back in that run that they had with the market up to about $82. But Roku, man, in the doldrums for sure. Well, Kevin, we appreciate you taking the time on a busy day, man, and we'll be watching at 12.
It's going to be a fun one today, Tommy. Thanks for having me on.
Always a pleasure. Folks, tune in 12 noon Eastern time today, and we'll be right back. I think I'm supposed to have music here. Maybe my producers are on the queue.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at S&P. We are opening up 72 points, folks, 1.75%, man. I think Kevin did a good job talking about what the market's looking at here, folks. Relief rally, to say the least, okay? But we are not out of the woods yet, man. A big part of this component is oil and gas prices and energy prices coming down. That's not going to get us out of this, folks, okay? Food prices, I just told you, are increasing still at an annualized rate of 13.2%. Shelter, housing, increasing at 6%. That's just taking the last 30 days. Those numbers have to come down. Yes, less than what the market was looking for, but you take out energy, it's a little bit of a mixed bag. I wonder how the market's going to interpret this data as we inch forward on the day. You get the NASDAQ 100 up 2.2%. How about the Dow up 1.4%, man? Dow back to basically where we were, the highs of late May, early June. You get the NASDAQ 100 well above that level. NASDAQ 100, you're talking about 13,660, folks. That would be the 618 of the entire move lower we've had since basically April 1st. And if you want to see the acceleration we're talking about from basically the highs to kick off the year, you're sitting right at the 382 right now, okay? That 382, yeah, about 100 points below where we're at right now. You're sitting right at the 382 of that full move that we've had lower. And it's a big move, folks. It is basically a 5,500 point move in the NASDAQ 100 down to 11,068. As I mentioned, crude down about 74 cents at 89.77. We got some big action in the dollar index. We'll talk to our man Teddy Kegstat next segment coming up about the dollar. We'll talk a little bit of notes and bonds. We'll talk some crude. We'll talk some Forex as well. Gold contract right now down $3.80. Remarkable. Gold gives it all back from that acceleration, man. With the dollar down so dramatically, you wouldn't think that you have gold giving it all back, but nonetheless, quite a market. Gold up to 1824. We're back to 1809 right now in that gold contract, and we jump to notes and bonds. They give back some of it as well. You got the 10-year right now up 19 ticks, the 30-year up only 9 ticks. Seeing a little bit of a divergence in terms of normally, right? You have the 30-year trading multiples to 10-year, but that's not the case when we're dealing with what we're dealing with right now. That ties in well to the next article we're going to pull up, which is Fed rate hikes slumping after yield curve briefly hits 4-decade extreme. So 50 basis points seems like the expectation right now. That's for their September meeting. The yield curve briefly inverted to a new extreme before reversing, folks. You had the 2-year benchmark at one stage plummeting nearly 20 basis points to 3.07%. Swap showed the amount of tightening price for the Fed's September 21st decision to around 59 basis points. That's looking for 50. The market's looking for them to peak around 3.5% in the first part of 2023. Now, getting into the here we go. Meanwhile, the widely watched yield curve between the 2 and 10 briefly shifted to its most extreme level in 4 decades in the immediate aftermath of the data. The shorter 10-year yield briefly reached more than 58 basis points above the longer. Can you imagine? You're getting 58 basis points more yield to lock your money in for 2 years as... Yes, I had to do it in my head again. I almost got caught. I said, that doesn't make sense. Yes, it doesn't make sense. You want a 2-year investment, we'll pay you 58 basis points more than if you lock your money up for 10 years, folks, okay? That move proved short-lived, however, as the front end of the Treasuries market outperformed, dragging the differential back to around 41 basis points. Huge moves when you talk about the yield curve, everything going on in this market. Yields for maturities out to around 5. So the maturities actually edged slight higher. So you have the longer ones edging a little bit higher. You have the shorter duration ones edging lower. The methodology behind that is you're going to have a Fed that's going to be less prone to hiking on the short term, right? Less likely to reward those shorter term maturities with a higher yield because they're going to be less likely to hike to tame inflation. Nonetheless, that's going to play out, folks, and it's going to keep playing out in a big way. Getting into some of those numbers as I kicked off the program, you know, you're going to hear a lot of talk about CPI peaking, folks, okay? The only thing I'm going to tell you is that we're literally at the same number we were at since March, okay? And the only reason we got a month-to-month flat number is because you had energy prices down dramatically. Excluding food and energy, core CPI rose 5.9% annually, 0.3% for the month, both below estimates, 6.1 and 0.5, okay? Year over year, consumer price index, this is the core number, we have pulled back, all right? So, I mean, look at where you had. February was 6.4, March 6.4, 6.1, 6, 5.9, and 5.9. The only thing I'll say is we're right where we were last month if you take out food and energy, folks. All right? And you can't necessarily take out food with what's going on, man. We got food going up 13.2% on an annualized basis, all right? The jump in the food index put the 12-month increase to 10.9, but we just jumped 1.1 in the last month, okay? That is the fastest pace since May of 1979. I wasn't even alive. Even with the monthly drop in the energy index, electricity prices rose 1.6%. Energy index rose 32.9% from a year ago. Used vehicles, an interesting one, 0.4% monthly decline. Used vehicles finally maybe turning the edge there. Apparel prices also fell, easing 0.1%. Transportation, we're off 0.5%. Airline fares fell 1.8% from the month and 7.8% from a year ago. That's one that may help the market, folks. That's been a big contributor when you talk about those rising prices across the board. And yeah, as they say, markets, yeah, they reacted pretty positively, I'd say. Shelter costs, which make up a third of the CPI. Pay attention to shelter, man. Pay attention to those rent prices, folks. 1/3 of the cost of CPI continued to rise and up 5.7% from a year ago. Gas prices, crazy, right? July drop in gas prices, some hope after prices at the pump were over $5. Gas, though, still up 44% from a year ago. Fuel oil, 75.6%. I mean, they're video game numbers, to steal a term that our man Kevin Hincks uses occasionally. Video game numbers, folks, in this market. And the market's holding up pretty well, man. S&P's holding on to the 1.6% gain. NASDAQ gives it up a bit, but we're still up more than 2%. Let's see how some of the stocks are making moves this morning. Tesla gives back some of that gain. We're up 3.3%. Let's see how Twitter's reacting to the news. They're positive, rightly so. The probability that deal gets done is higher when Elon's got $7 billion of cash minus the taxes he's going to pay sitting in his bank account. Some of the FANG stocks, Amazon's up 3.4%. The big dog Apple up 1.8%. Microsoft rocking higher by 1.8%. Google rocking higher by 1.9%. Stay tuned, folks. We'll be back with our man Teddy Kegstad. This coming Wednesday, August 10th, Basil Chapman will be hosting an all-day live webinar from 9 a.m. till 2 p.m. Eastern Time, where he'll be presenting the technical tools based on the Chapman Wave methodology, a full in-depth course on his entire trading system. Over the 5 hours of live education, Basil will discuss studying and practicing entry and exit points, assessing where to add or subtract from positions, utilizing simple technical tools for holding positions longer, taking bear charts and adding notations, tools, and patterns, as well as identifying 3 core formations that repeat in every time frame, and much more. When you sign up, you get a chart booklet emailed to you immediately to start studying, and you gain access to his daily newsletter, The Opening Call, a $149 value. The cost to attend is only $295, and the full 5 hours will be archived. Don't miss this live special event Wednesday, August 10th with Basil Chapman. For all the details and to get started today, visit the front page of TFNN.com right now.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P right now up 60 points. That's up 1.5%. Let's jump over to our man, Teddy Kegstad, folks. We talk to Teddy every Wednesday at 40 past the hour. You can check out Teddy's outstanding newsletter, folks, right on the front page of TFNN, the Tiger Forex Report. Teddy puts out new issues every single Monday. He puts out updates when the market warrants it. And boy, we got a lot going on in this market when you talk about yields, Forex markets, crude. Teddy Kegstad, good morning.
Good morning, Tommy. What'd you think about that number, huh?
There's ridiculous. A lot to dig into that number, man. It's almost like, Teddy, that we got so much data coming out lately, man. And this is what creates so much volatility, in my opinion, at least, that there's almost something for everybody in every single number, man, that we got coming out. You know, in terms of energy prices coming down, but food prices are still up. Month over month, the number's flat. But we all know month over month, the number's flat. But it's not flat right now in CPI land, right? So it's just interesting action, man, across the board. What's your take on that number this morning?
I think I was listening to you guys talk earlier, and there was a couple comments about how, and you already was scanning the news already, how they're already crying, it's peak inflation, we're here, blah, 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 start to get happy, everything's going to be all better. I think people need to really put this number into perspective. Think about if you're driving in a car and you're driving 50 miles over the speed limit and you're redlining right now, okay? And that red line gauge is your CPI number. All it did is your RPMs dropped a little bit, so now you're going 45 miles an hour over the speed limit. You're still speeding. It doesn't mean anything, it just means that the acceleration has slowed a little bit, but inflation is still really here and driving, and is the driving force in the trends right now. And I think that where the news is going to call and get on their pep rally box, which they always do for this kind of thing, the market's already showing you that it's not fooled by this number. And you can see by how the dollar first took a blow, but it's coming off of those lows from today, or highs and lows depending on which cross you're talking about. And I think that overall the market's not that stupid. They're not buying this reduction, if you will, in inflation.
Yeah, I mean, you could make the case that this could be peak inflation, right? I mean, I could, if I was writing a paper in college or something like that, and they said make the case, right? I could make the case. There's enough data out there, but that I'm sure I could make the case on the other side of it too. In terms of the other side, as you were just kind of talking about, we're at 8.5%. We were at 8.5% in March. Core number has come down, but boy, you look at some of the elements of core shelter. Very, very sticky.
Yeah, sorry, Tom, you got a little choppy on there. Did you say something
talking about the food number at one?
Yes.
No, I sorry about that. I know I'm dealing. I was talking about shelter costs, 0.5% up for the month, right? And that's very sticky. Maybe you get that's a 6% annualized, and then you have food up 1.1% just on a monthly basis, and that's off of a number that's got to be pretty high when you think that's a July number compared to a June number, and we're up 1.1% on food, man.
Right.
So that's I hear what you're saying for sure.
Speaking of the food number, can I just tell you something real quick on that food number? And I think people should also think about this. I talked to somebody who's a food producer, and they were talking to people in the industry about, are things getting better? Is inflation starting to level out? And he said something that made a lot of sense, that distributors, like let's say of forks, paper plates, napkins, and things like that to restaurants, the cost to restaurants now is going down slightly for these items, but it's not because that there's this oversupply of things and the supply chains are fixed. It's that the orders are being reduced. So they're actually now, the suppliers are having more product to give to the buyers because the buyers aren't buying so much. So that's a problem that we have right now. So these numbers, as they start to come off and say, oh, inflation's not accelerating, things are getting better, you got to think about, why are they getting better? Is it because people are still spending money and the price is going down, or is it because people are spending less and the demand is drying up?
I mean, that's kind of part of the conversation, at least with some of those retailers, with Target and Walmart and where they just had a glut of certain aspects of their products, and people saying, eventually they're going to have to get rid of that inventory. There'll be lower prices, they have sales, whatever it be, but not necessarily indicative of strength in the economy if that's pervasive across the board. We got to talk a little bit of crude.
Let's talk crude. So just like you were talking about with inflation, it's ironic that the crude market is right now is trading at the level that it was plateauing before it had that huge acceleration up to 120 when we went from 90 to 120. So I know you're going to say, are you finally going to be no longer a bull? I'm still bullish, and I think that we're treading on some interesting ground now for the oil market. We'll see what the numbers come out later on this morning. I still am a bull. I think that right now it's a short-term pause for the cause, and I think another thing that's stressing the dollar is the fact that oil is down, so that means that you got to remember that the oil is still driven by the dollar as far as pricing, and interest rates are going down because the market is lifting the interest rates to a bid right now, which is in the opposite direction of which way the Fed is going. So I think that right now we're at this touch and go stage where it's when everything starts to look rosy and the news especially is getting all happy, we're coming into elections. I'm not buying it. I just am not buying it. I think we're going to see that right now it's just a stabilization before we start to go back to the original long-term trend, meaning higher oil prices.
Yeah, I got the chart up, man, of this crude contract, and as a technical trader myself, very hard to go bearish when you're at levels that we haven't seen since February. And meanwhile, the war is still going on, man. Europe's still in big trouble. We still got issues in terms of supply chain issues across the board. So I'm not sure that, the market is back to, like you said, before the breakout. I'm not sure all those risks are alleviated in the market where you have a price that's in the 80s right now, 89.57 I got as we speak on the crude contract.
And that's the front month. That's the front month. If you look at the further out months, the expectation is higher pricing for oil right now. It's not a deficit.
I'm just tying things back, folks. I had it on a daily. Let's just go back on a weekly. But you're talking about, man, we were trading at $80, folks, in October of last year, right? I mean, just in context of all the variables that are in that market right now, Teddy, that weren't obviously priced in correctly before the war, going all the way back to October, seems like $89, man. When you're dealing with 80 last October, we might be in a range that's higher for at least a period of time, longer than we're sitting right now. We got a couple minutes here. What Forex pairs are you looking at, Teddy? We got action almost all over the place this morning. Any you want to touch?
Well, let's talk about what happened so far today. You've seen an acceleration to the upside in the euro and the pound. The European currencies have definitely pounded the dollar. The Swiss, U.S. dollar Swiss is making new lows. that's what you have to watch is a divergence. You have the euro that finally broke resistance and breached that level and now popped a higher move high, but it's barely making a higher move high. Okay, so and you have the pound, which hasn't made a higher move high. So the trend there is you have this nice little stabilization, but you look at how the number is. The number came out, the dollar got whacked. I'm telling you, the market is getting it right, and the news is going to get it wrong on this one. I think that it's a head fake, and then no matter what, at the most, if we don't get bearish, meaning these other currency, meaning bullish the dollar, I think we're just stretching the range of consolidation. I don't think that the dollar is that weak right now versus these currencies.
I like the take, man. We're on a lot of the same pages. I appreciate you taking the time, as always, Teddy.
Thanks,
and we'll
Tommy.
talk to you next Wednesday, man.
Yep. Okay. Take care.
Have a great one. Folks, check out the Tiger Forex Report on the front page of TFNN. He's got outstanding reports every Monday. Check it out. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got our man Tommy O'Brien IV sitting in with us for the final segment of the program. You say hi to everybody? He's playing on his phone. He's keeping it fresh on the phone, the electronics, huh? Did you say hi? Look up here. You say hi to everybody? Say hi. Yeah. What do you think, Tommy? Has inflation peaked? I tell you, folks, if you have a kid, and it's the most amazing thing in the world having children, folks. There's no joy like it, I'll tell you. But boy, get ready to buy lots of stuff because it never ends. We got milk, right? We got fruit. We got diapers, right? What do we got? We got onesies, right? You see yourself? You say hi? You say hi? Say hi to everybody. Hello. Yeah, he's watching himself, huh? We got the S&P's up 68, folks. What do we got? NASDAQ up 275, Tommy. Ooh, what's the Dow up? You want to count for him? 1, 2, 3. He can already count to 10, folks. He's a little bit enamored about himself on the screen right now. You see that? I know. Oh, you knocking? Let's go. You play the drums? Play the drums for him. There he goes. Get it. Get him. I think he's going to be a musician, folks. Very possible. Loves music. Huh, tell him. Get him. Get him. You going to play the drums, and the piano, and the guitar? You like the guitar? Yes, he does. Huh. Get it. Get it. There we go. You see yourself? There you are. There we go. There's the man. There's the man. But yeah, you want to talk about feeling CPI, folks? Have some kids. That'll get CPI right in your pocket, man. You talk about milk, and thank goodness for my family that he was off formula, because that formula shortage was quite a deal, man. We were buying formula, and folks, it's life or death for these kids. You know, I mean, yeah, you can try and feed them, but they're not even having hard food, so it's an important deal. All right, say goodbye to everybody.